Good evening and welcome to the Australian Stock Market Show. Now, if you're a little confused about the stock market, then you're not alone, as many investors are struggling right now. Our aim tonight is to see if we can clear some of that confusion up for you. Our main topic for tonight's show is we investigate the best 5 dividend stocks to buy that have dividend yields above 10%. First up tonight, we'll share our hot stock tip for the week before diving into our view on major world currencies. So sit back and relax. Tonight will be jam-packed as we answer your emails, take your phone calls, and give you the answers to some of the most important questions around the stock market.
Hello and welcome to the Australian Stock Market Show. I'm Janine Cox, and joining me tonight is a guy who brings a fresh perspective. You met him for the first time last week and everyone loved having him on the show, so we're inviting him back, and he's an amazing assessor for our education team. He's an incredible analyst, so welcome back, Pedro Benales.
Thanks, Janine, and hello to everyone. It's great to be back on the show with you. I do like our topic for tonight, which is all about the best dividend stocks. Lowest risk and ideally fully franked up dividends of around 10% and above. And we've got some really interesting research to share and some great stock opportunities. So keep watching as we'll get into that very soon.
Well, first up, Pedro, we need to get into this week's hot stock tip.
Okay. So on your screen right now is MND, Monadelphous Group.
Great, interesting.
Yes,
so
it's
what
an
have you got to
interesting
share
stock.
with us?
Well, we'll start off with what type of company it is. It's an engineering group providing construction, maintenance and industrial services to the resource, energy and infrastructure sectors. So that's a pretty exciting area at the moment, isn't it?
Very in demand, yes, and it shows on the chart. So what else can you tell us?
So we've got a dividend yield of 3.4, but usually with these ones, you're not really looking for dividend yield. P ratio is a little bit high, as we were looking at before.
Now that's used to be typical of a growth stock, to have something in the 20s, you know, something that's low dividend, high growth. So maybe this is still fitting, but in this current market, we've seen so many mining-related stocks which are typically following that same model, but they've totally been turned on their head.
They have.
Whereas this is still fitting that example, isn't it?
It is. So it could be like one of those early growth type stocks. I mean, it is at the top end of that quartile of the 52-week range, and it's had a return of 5.89% this year.
Which is interesting because it's quite low. When you look at the volatility on the chart, the way it trends, you would think that, okay, maybe it's poised and we're about to see some more.
Oh, that's exciting. Well, I'm sure that you're dying to get into the chart as you are.
So shall we go and have a look at the chart?
Let's.
Now, there we go. We've got the monthly on the left-hand side. We can see that it's sort of coming to a bit of an apex there on that monthly chart. What can you tell us about the weekly chart, or what stands out for you?
For me, it's a nice little pattern that it's forming there, as we can see at the end. I'm just going to scroll in there on the weekly chart. Let me expand that, actually.
We don't need to get our magnifying glass out now.
Yeah, that's right. Yeah, we don't have Dale to tell us off, so we're going to have a bit of fun tonight.
He's the one that needs the magnifying glass, doesn't he?
Yeah, that's right.
Yep.
We can joke because he's not here.
We can, yeah. He'll get us later.
So I do like this little pattern that it's forming. It's closed on its high as well, and it is above the 50% of the all-time high.
Now, what's the significance of those lines that you've got there?
That's just a previous resistance, which, as we know, creates support.
Okay.
So it's at $13.40. Right now, the stock is trading at, on the close, it's $14.40. So it is a fair bit away from it. I'd be thinking that if it goes below this bar of, say, you know, the low of $13.50, it could be in trouble.
So it's in an uptrend on the weekly chart. It looks quite strong. It's got a lot of boxes that it's ticking for us. It's not one, you know, for high dividends, obviously, but it's more about growth, isn't it?
It's more of a growth stock. That's right. And being in that area where they're actually servicing, it's kind of like the saying, "Sell the spades, don't mine for the gold." You know, they're kind of
Yeah.
they're selling the services and the engineering things. So
Yeah, actually, that's a really good point that you've made, because there's quite a lot of mining companies that are right on that borderline of whether they're going to be profitable or not in the years to come. But, you know, this one obviously looks like it's just milking all of that, so that's good to see.
Yes, definitely. So that was MND.
And look, is that line
it.
at the top, is that where its potential is?
That's previous resistance there at around $19.80, say $20 to round it off.
Okay.
So very possible.
Okay, well, that's exciting. Well, fantastic. That is it for our weekly hot stock tip. Shortly, we'll get into the best dividend stocks, because we know how much you like to have additional income streams. But before we reveal the stocks, it's your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 9290 9988. That's 03 9290 9988, or you can text your question to the number on the screen now. And remember, Dale's not here, so we want to see as many callers and texters coming in. Bring them through. Now, you're eligible for a free copy of his book, actually, and I'm probably going to give away, how many should I give away tonight?
Yeah, right.
Give them all away.
We've got a blank check here.
Accelerate your wealth. So we've got a book here, so pick up your phone and dial 039290 9988 right now. While you do that, tonight is the 4th Tuesday in the month, which means we take a look at world currencies. So let's get into the charts.
All right. So on the screen now we have a watch list of the world currencies.
Excellent. Now, here we're looking at the yearly time frame, and we can see that at the moment, the top of the leaderboard is Aussie dollar versus the Russian ruble, which is not really a surprise given the volatility with the Russian currency and everything that's going on at the moment. So, you know, that's just a very sad state of affairs with what's happening over there. But we're looking at Australian dollar versus the Japanese yen. That's up 6%, which this one is one that you've highlighted that you'd like to chat about tonight.
That's right.
We're going to have a look at the chart of that shortly. And then we've got the Aussie dollar versus the New Zealand dollar. That's up 0.96%. So that's
neck and
interesting.
Neck with New
You're
Zealand.
not thinking of going on a holiday anytime soon, are you?
I'd love to go to New Zealand, actually, get some cheese. And
Okay.
Beautiful.
Aussie dollar versus the Chinese renminbi yuan, we're actually down 3.28%. Now, the Asian markets are sort of in the middle of that leaderboard, but still negative. And it's interesting to see that we're still down against the US dollar for the year, down 6%. And, you know, it hasn't been looking great for our currency, has it?
That's right. And with the relentless, monetary policy that they've been going at and raising interest rates, plus the demand for Aussie dollars, for US dollars, I'm not surprised that we're actually
moving in that direction. And the Aussie dollar versus the Canadian dollar, about the same level. This is another interesting one. The Aussie dollar versus the euro, down 0.678%. We're also going to take a look at that one tonight. So it's more or less in line with where we're tracking with the US dollar. The Australian dollar versus the Hong Kong dollar, down 6.8%. We're not faring well against the British pound sterling, down 8%.
Wow.
And it's Aussie dollar versus the Swiss franc. But you've identified a couple that you'd like to have a look at, and we're also going to have a look at another one, aren't we? The Aussie dollar versus the rupee.
The rupee, yes. We'll get into that now.
Yeah, let's get into that. So you pick the one we're going to choose first. What would you like?
Let's go the rupee first, because some interesting things are happening here. We've got the iPhone manufacturing slowly moving into India. And manufacturing as a whole, as you can see with all the trade wars that are going on and everything, a lot of manufacturing...
Could open the door for India in a much bigger way than it has already.
So the demand for the rupee could actually take off. At the moment it's trending sideways, but I think it's one to watch.
So what's happening with the iPhone?
Sorry?
What's happening with the iPhone? What state is it in at the moment in terms of manufacturing?
So they've actually shifted a lot of the manufacturing to India. I don't believe that all of the manufacturing is there at the moment, but it is slowly trending that way. And if the iPhone manufacturing works out, I could imagine other tech companies or other companies are going to follow suit,
right?
Especially with what's going on around the world, especially US and China. I'm thinking that this is one to watch. Another one is actually the Japanese yen, which has shot off.
That looks amazing, doesn't it?
Have a look at the monthly.
It is.
Yeah, very bullish.
So we're so strong against the Japanese yen there. So this would be, it looks much easier from a trading point of view for someone who is trading currencies to be looking at this one.
Yeah, definitely. It does trend nicely when it starts trending.
Okay.
And it does make some interesting patterns that I'm sure some of our students would be seeing on the chart right now.
That's excellent. Well done. All right.
That's it for our thoughts on the world currencies. Now let's get into our first question.
Our first question or first email is actually from Liam. Hi guys, I'm curious to hear your thoughts on Clearview Wealth Limited, ASX code CVW. I do not own the stock, but I do think it looks interesting from my brief look. Regards, Liam. Now, that is an interesting stock looking at the chart. He's picked this up. He doesn't really go into detail and to say, why he's picked it or whether, whether he's bought it. He's just saying it looks interesting. But it's a smaller stock, obviously. Now, if we look at the monthly chart, we can see it's more or less in some sort of a basing pattern at the moment, sideways, consolidating. But I mean, if it breaks out above this high here, and this is the monthly chart, if it breaks above that August high of 57, then we could see it trade higher, couldn't we?
Oh yeah, I'd be getting pretty excited. It looks like there could be some accumulation going on there, depending on which way if it goes up.
But look at the trend that's happened over time. I mean, I just find this amazing to see this sort of thing when we're actually on a monthly chart. And, it's the sort of thing you'd expect from a smaller stock on a weekly chart, isn't it?
It is. It's well, look at those big moves, and you could trade this on a trend line. Just on a basic trend line on the monthly. Yeah,
just putting the trend line. We can see that just as it's unfolded on the rise here, it's just gone through just beautifully like that.
You'd be out
and
now.
And even previous trends as well. But let's just have a quick look at that weekly chart so we can help him out a bit and just tell him what we think of from a shorter term perspective. I guess, Liam, if you're watching right now, we'd be watching this high here, which is 57 cents, as we said before. That was 25th of August. It's also got a bit of resistance here, which is just slightly higher there, 57.5 cents. So once it clears all of that, I think it's pretty much likely to head up towards 70, possibly 76 cents in the short term. Now, you've also got to consider the downside. So what do you see for the downside if it does fall away?
So the downside, if I can just grab onto here,
that's the low that you're interested in?
That's the low that I'm interested in. Look how many times it's actually bounced off those lows. If it does break below that, it'll be all over. Another thing that I'm thinking is the volume. That's in the thousands. Yeah. And it is only a 50-cent stock. Not much volume lately at all.
That's a really good point.
So I'd be watching it. The short-term bar analysis says it's looking good. The bars look like it's trending upwards, but these are the type of stocks that could fall out of bed really easily. You can't trust them. You can work with them, but just be very careful. I would say
be vigilant and monitor it. If he does consider buying it, he's obviously got to have some sort of a nice tight stop loss on it.
Yes, definitely. Okay. I'd be looking at that.
Well, fantastic. That's wonderful. So, look, is there anything else that we want to talk about in relation to Clearview Wealth at the moment? I mean, what about when it reverses and we see these interesting reversals? So we saw these two highs up here. It looked like it was trying to move higher and then it just fell away. So you could think that you're in a stock that's going to continue higher and it becomes a trap.
Yes.
Because people get greedy, don't they? Let's face it. We all feel a little bit of that at times when our stock's going higher.
And it's at the wrong time.
Our chest and say, look, look how good this stock's going. It's one of those. This could be one of those barbecue stocks where people talk about it.
It could be, one of those forum stocks that people hype up and so on.
So you've got to be careful.
I'd say to Liam, just be careful, keep a tight stop loss. And just have a look at that volume as well. The volume will tell you a lot.
Okay. And look, would you trade it on the monthly or the weekly chart in this case?
I'd be looking at the weekly chart and even go down into the daily chart just to have a look.
To protect yourself.
To protect, definitely.
All right. Well, look, Pedro, it looks like we've got a text from Philip. He's wanting to know about WDS. Hi, guys. What are your thoughts on WDS? Does it look good long term? All right, so we'll just have a bit of a look at WDS to see what we've got there.
Woodside.
Woodside has been such an interesting stock. It seems to be holding its ground, which is incredible. A lot of stocks are falling away at the moment, but it's been quite defensive, hasn't it?
It has, yes. I mean, it shot off after that merger, was it, with... who did they merge with?
No, they took all of the assets from BHP.
That's right. They took the assets of BHP.
Assets.
Yep. So they did shoot up from there, but it's just been trending sideways since. Now, could that be the big institutions accumulating it? Could it be
Very
that it's
so.
getting ready for a bit of a run?
Well, you've also got to be watching on the flip side of that to see whether it could be in a sell-off, but they're just sort of slowly they're trading it up and down and taking small clips, and then eventually it could just roll over. So that's the other side of it, isn't it?
That is the other side of the coin. And if we look at the chart on the monthly, there, I'll just expand that up.
Okay.
It has trended up since the low of 2020.
What's interesting is it still hasn't traded past that high in 2018. So that would sort of tend to tell you it's been going sideways now for 6 years or more.
Yes.
And so you'd think it's overdue to get above that, wouldn't you?
Yeah, it just doesn't want to get above that. It's really hitting its head on that level.
I think it's one to have on the watch list for sure. I like it.
Definitely. And with the oil prices and things that are going on at the moment, you see what's going on in the Middle East and so on. These guys, the price could shoot off. And
I know, it's interesting, but then how do you explain the sell-off? So we look at Woodside and then we look at Santos. The stocks are being sold off, and yet we're seeing it's like a contradiction of terms, isn't it? You'd be expecting it to move higher, and yet it's just hanging in there.
It is a strange time, isn't it? It's you almost have to take that contrarian view.
Yeah, exactly.
And have a look. It could seem like we're in dire times, but it could spell opportunity at the same time.
That's great. Good point. Well, look.
Now, if we could put a trend line underneath there as well,
just to check and see whether it's crossed that line.
So you've got that first momentum there.
Well, if you're holding the stock, obviously you don't want it to be coming back to the level of that flatter line.
You don't exactly, and you could maybe, it's not an actual trend line, but
it's just showing the angle of the overall trend.
Yeah.
So it's still hanging on to that line. So while it's there, unless it has a significant fall, you wouldn't be concerned about that. And it looks like it's coming to a point. Perhaps it'll just get squeezed and then eventually break out.
It could be. It could be that it'll get squeezed from up here, from the resistance, and that trend over there, and then continue to move up from there. So keep an eye on it.
Well, what have we got next?
Okay, so next we've got a text from Paula. Good evening. I bought MAD around 15th of December 2022 at around $3.50. I still own it and would like to know your thoughts. Regards, Paula.
Well, Paula, this is completely mad and awesome. That's all I can say, because it's a fantastic pick. So well done. And from a lady as well. So excellent. So I really like this, but it's come back at the moment. It's taking a bit of a breather.
Yeah. So what have we got?
Let's have a look.
$5.60, and it trades in the thousands. You'd be pretty mad, to try to trade this stock if you're a beginner. But there you go. You could exit on a trend line if you were.
So it's just gone all the way up. So it's beautiful. It's just working on these angles of these trends and has fallen away. And look, the sell signals are there, just showing you that it's it could be oversold right now, but it may also be continuing down to the angle of this line, and that's really the risk, isn't it? So to not have a trailing stop loss on a stock like this is just really, really risky. But in saying that, it's down 30% at the moment, and often stocks fall around 30% before they turn around.
Yes.
But it's just, the history doesn't tell you a lot, does it?
Yeah, it's. I wonder why. What's made it actually take off like that? There must be some type of underlying reason, fundamentals, or.
Yeah, you would have to do a bit of research. So I hope Paula has done some research on this one. It'd be a good idea to do it. But you can see here, 30% fall, 30% fall. We've now got another 30%
Yes.
fall. It could just be following that pattern and then be about to turn around. It's on the other side.
It could be, and like Dale would say, you'd have to have strong intestinal fortitude to be able to weather those type of moves.
Yeah.
It does seem quite volatile, but as you've put on there, you've got the trend line.
Look, if you and I had bought this, we'd be out by now. There's some rules there that would have
Yes.
taken us out.
Yep.
But if we were still in it, then perhaps given the repetitive nature of those falls, then we may be just waiting to see if it falls below. But you've got to draw the line in the sand and say, well, there's a point at which we're not going to hold it anymore.
Yeah, that's right. And I think that's coming up soon.
Yeah,
so
I agree.
Watch for that, Paula.
Excellent.
Okay, Janine. So what do we have next?
Well, I'm just going to keep everyone in suspense now. No, I'm only joking. Well, Pedro, it's that time again. And yes, we have lots more stocks to share. However, right now, it's time for what you've all been waiting for, our topic for tonight. And it's all about the best 5 dividend stocks to buy. And ideally, we want low risk, fully franked dividend yields of 10% plus. And while big blue chip stocks are generally best, you can sometimes find a few outliers.
Now, whether you seek income or capital growth, investors are currently desperate for high dividend stocks. The type of stocks you choose is going to depend on your portfolio type. What's that, you might ask? Well, I'll give you the simple version. You can choose stocks for growth, income, or both.
That's great. And it can make searching for stocks much simpler, particularly when the market conditions suggest the time is right to focus on stocks with a good dividend yield. And we're going to share a few stocks that we're watching before we drill down to reveal the best dividend stocks. Pedro, would you share tonight's quote for us, please?
Sure will. So tonight, it's an interesting one. I found it on Morningstar's website. It's from the founder of Vanguard, Jack Bogle. So
Okay.
you listen to when these guys speak, that's for sure. He said, the reality is that the fundamental return, the dividend yield, plus the earnings growth of companies drives the long-term return of the stock market.
That's interesting, isn't it? So it's like, looking at that, you'd think that everything would be perfect, but it's not. So it's all about, he's talking about whether people are prepared to pay more, or maybe that they're not, and they're prepared to pay less. So that's and it's all about the speculation around that.
That's right. It's a very fundamental, very values-based approach, isn't it?
Isn't it?
And whether you believe that the market is efficient or not, I think that plays to that as well. So
well, we know that it's not, like in our opinion, it's not efficient, particularly given the control that the big end of town have in the marketplace at the moment.
Yes.
So from that perspective, it isn't. But what he's saying is in the long term that everything sort of becomes equal. So in effect, if the company's got good earnings and they're paying the dividends, then they'll attract the investors. They should continue to rise. And hopefully, obviously the business has got to support that over the long term in terms of their products or services or whatever it is they're in.
And that's what's going to bring all these big fund managers at the end of the day. They're going to be looking at all the fundamental data.
And consistency. They're looking at the 5-year earnings history to see what consistency there is in a lot of stocks these days. But it's been so volatile and there's been such uncertainty around all of that in the last few years.
Well, I think that's a good point, because especially in this day and age where you have the economies starting to slow down, it's really important to have a look at those little hidden value type of stocks, isn't it? Those ones that for the long term. Yeah.
Good idea. Excellent. We might look at a few of those tonight.
Oh, we might, if people are ready for it.
All right. What's next?
Of course, we want to hear what you think. So if you have something to say, remember to share your thoughts by commenting below the video after the show.
Now, Pedro, what struck me was reporting season, okay? So it's always an interesting time, but this year was particularly so as dividend yields have been incredibly high and we saw yields fall for a number of companies, but there are plenty of opportunities still to pick up good stocks with high dividend yields if you know where to look.
And a number of stocks have their ex-dividend dates in the current quarter.
Well, that's interesting, isn't it? And I'm glad that you pointed that out. And it would be nice to pick up a few extra dividends, wouldn't it, before the end of the year, before Christmas?
Oh, yeah, bit of pocket money.
So how about we bring up the list and have a look at that? Do you think we should get into that now?
Yes, definitely.
All right. So if we have a look at the... Okay. So we're looking at the dividends, upcoming dividends. Now, this is actually on Market Index website, so anybody can go and look at this. You can Google that. We can see a list of companies there, and it actually shows you the days before the stock goes ex-dividend, which I thought is nice because you could look at a date and, you might look at it and think, oh, the 25th of October, but it's just saying, okay, it's really sort of in your face. You've got 1 day to go.
Yeah.
You've got 2 days to go before
to buy the stock
before
to
you
get
can get
that
it to get the dividend. And it just goes through and shows you the amount and the franking, the type of dividend, whether it's an interim dividend or final dividend. Sometimes those final dividends can be bigger than the interim dividends, something to watch for. And also, if you look at the pay date, you can see there the pay dates for those. So 21st of December, there's a yield there as well showing what the current yield is. I'm assuming that's for this dividend, but something to follow up on and see what that's actually indicating. But of the stocks that I can see here on the left-hand side, there's really one that sort of stands out for me at the moment, which is Bank of Queensland.
Same with me.
And that's one that we've actually got on our list of stocks to have a look at tonight, as you know. And so there's 2 days to go before that, but it's not about saying, okay, the stock's coming up for a dividend, it's paying a healthy dividend, I better get in and get it, as we were saying before. It's about risk. So you've got to look at the risk and whether something's of acceptable risk and ideally a lower risk if you can. Bank of Queensland's not high risk, but it has been in decline for a long time. So
it has.
It's something that, and it has been a bit more volatile than what I would have expected Bank of Queensland to be. I thought it would have been going up, pretty close to now.
With the other banks, and I agree that Bank of Queensland is one that I've watched for a while, and it's just been trending down. I get excited, and then it comes back down. So. Yeah,
that's right. So look, we've had a good look at that. So what would you like to talk about next?
Okay, so it's really important not to be lured into high dividend stocks just for the dividend alone and ignoring something even more important, the risk, which could be high.
Let's go. We've got to make it a priority to check the stock's volatility as this has an influence on the risk, and ideally we want a measure of volatility to compare stocks to find the best ones. Before we get into that, I know that you've got something to help us narrow down the search.
You know it, Janine. I think you took a peek earlier. Yes, Janine, that's right. It's important to make it as easy as possible to find the stocks, but there is not one way to go about it. I've got a very easy way to do this.
That's great music to my ears because we technical analysts don't like to make things complicated now, do we?
Oh, never. We can let the tools in Optima cut the systems. I think so, yes. Hopefully this is going to spin their heads, what we're going to show, because we can actually let Optima cut the research time. So firstly, we're going to have a look at the sectors, taking a top-down approach, and we will use our favourite seasonality chart to pick a few good ones. Okay,
Pedro, what have you got for us?
Okay, so on the screen now, we've got a seasonality chart of the consumer discretionary seasonality chart. That's a mouthful. Try to say that fast 5 times.
Yeah.
Now, this is showing in certain months. So it's for the last 10 years.
Okay.
Over the last 10 years, which months are typically positive and by how much? You've got on the right-hand side the percentage there. Typically by how much they are positive and how much they are negative. Now the line that you see here is just the last year alone. So we can check how that tracks in comparison to its average, 10-year average.
Well, the start looks like it's tracking. The first 3 months looks okay, but then when you get into sort of April, May, June, it looks like it's doing the opposite.
It is. I mean, April was in accordance, and then you go down to May, and it's a lot more negative than usual. So what does that tell us about...
So how reliable is it, I guess, is the point, isn't it? Because
exactly.
we're looking for that. We're looking for something that's... When we're talking low risk, it's more about, you know, how reliable are the dividends? How reliable is the stock in terms of its movements and repeatability? That's what we want.
That's right.
And not high volatility. We don't want that high volatility. And there are lots of stocks on the market that have higher volatility than what we would recommend that people look at.
Definitely, especially when we're looking for those nice and steady dividend paying stocks.
Now, what I'm excited about is the fact that you've got something on this chart that Dale doesn't have. So,
yes.
So I just can't wait to tell him this. So this is fantastic that you've got this, and it's showing the current month, October, as well.
Current month, we on the consumer discretionary, it's fairly low.
Yep.
But with what's going on with interest rates and so on, I'm not surprised. People are really tightening their belts, and rightly so.
So a 4% swing to the downside, roughly, is that what it's showing?
It is exactly right.
Okay.
4% swing. Now we'll go through them a little bit quickly because we want to cover off all
one
of the
more.
sectors.
I mean,
yes.
in theory, it should rise from here because historically October's been up, November's been up, and December's been slightly up. Although that's showing last year it was actually down. So, you know, you'd think that the moment the majority's indicating a swing to the upside.
It could be. I mean, we haven't gotten through October yet, and they do. You know, they've got that stigma of October.
Yes.
At the moment, it's living up to that stigma, but you can see that typically during the last 10 years that hasn't been the case.
Okay.
So
that's consumer discretionary. Overall, you're saying that that's not sticking to the historical formation as you would expect. So we could look for the next one.
That's right. And actually, compared to some of the other ones, it does actually track okay. If you have a look at, see the energy sector.
Okay.
Actually, that in January, it's tracked well. March. And then we've got April, which was below expectations. Good. Yes, May tracked fairly well, but look at July.
Yeah, it's way stronger than what it was previously over all of that time, the last 10 years.
Exactly, and I mean we do have to put this into context. There's been the events that has happened the last year that has caused energy
so a distortion.
A distortion, exactly. And you're bound to see that. And that's the beauty about these seasonality charts is that it smooths all of that out over the last 10 years.
Okay, so we're down again in August. We've gone against the trend in September because it's gone up when the brown light graph is showing it was down historically in September. And then October, November's typically up. So perhaps we're going to see a move up now.
It could be. It could be trying to play catch up.
Well, that's interesting, isn't it? Because we looked at Woodside earlier, and we were both indicating that potentially it could be squeezed one way or the other. So maybe this is indicating that it's more likely to rise now.
It could be. It could very well be because it's got a lot to catch up. I mean, historically, it's been up, say, around the 0.8% mark, and it's currently minus 3.
Okay, so let's have a look at the next one because we've got a few to get through.
We do, yes. Look at the financials. Yep.
Okay.
So financials, it's not bad. It's not bad.
It's tracking reasonably well, isn't it?
Yeah.
And then now all we need to see is October a move up into November, December, and that could depend on what's happening with retail and property. So, but that looks interesting to me, and it looks reasonably consistent. What about healthcare?
So healthcare, it's fairly consistent across the 10 years, and you'll notice that there's more blue bars than red bars. So typically it does have more positive months than negative months.
But much bigger swings to the downside this last year.
Yes, and not very large swings to the upside either. So don't expect extravagant returns from
healthcare at the moment.
Yeah.
Okay. All right, maybe that's one to scratch then. We're going to pick our preferred couple, are we?
Yeah, I think so. I think I already have my preferred.
Okay.
We'll see what you think.
You've had plenty of time to do the research and look at this.
Yeah, it's kind of cheating.
It is cheating. All right, here we go. What's next?
All right, we've got information technology. And as expected, it is fairly volatile. It does have again more positive months than negative. I like this because of those the size of those bars, a little bit larger. but it's pretty erratic. It's not going to track.
We're not likely to see sort of high dividend paying stocks necessarily in this area.
They're more growth,
Typically, yeah.
Typically.
Okay, but that's interesting from a growth point of view that it is tracking what historically it has been, so it tends to be a bit more reliable from a growth point of view, even though we have this perception about it being far more, volatile. But thank you for that. Okay, next one.
So now we have the materials sector. Materials. This is a little bit of a mixed bag.
Yep.
A little bit of a mixed bag. It's it does track to accordance to the average sometimes, as you can see in August and September.
But opposite in April and May.
But opposite
and
in
June.
April and May. Yep.
Yeah. Okay.
Exactly.
And March actually. So I'd probably scratch this one from my list for the time being. And we've seen this sort of weird situation going on with the big miners at the moment, just continuing to trade sideways. But we do like to have a couple of those mining stocks in our list, especially if they're paying good dividends. But given that August and September were down, perhaps we could be moving up from here.
We could be. Yep.
Okay. Next.
Industrials. Industrials tracks fairly consistent. It plays along pretty good. It does have these big moves. So in April, it's pretty positive. Usually, July, November, and last November actually it was above expectations.
So opportunities for growth.
Opportunities for growth in the industrials.
But could be quite volatile with some of the stocks in that sector.
That's right. You can't necessarily trust that it's going to do what it did in the last 10 years.
All right, let's have a look.
All right, so real estate. What do you see here?
Wow, that's perfect, isn't it?
Yes.
Yeah.
This is actually my favourite.
Okay, can I say it's my favourite too?
No.
Is that copy?
You got to pick your own one.
That's unfair. What about ladies first?
No. Okay. Ladies first.
So you're a gentleman?
Once we get to the next chart.
Okay, fantastic. Real estate for both of us then.
For both of us, yeah.
Okay.
I'd have to agree.
Terrific. All right, next.
It does track very good. So now consumer staples. This one is not very consistent, although you would expect the staples, the stocks within this sector. Now, this isn't saying that the stocks within this sector are volatile.
Okay.
This is just saying that the sector itself, how it usually tracks and how it's tracked in the last year.
Yeah, because if I look at the percentages on the side, it only goes down to about 4.8, which is a lot of those other scales were a lot broader than that in terms of the scale range. So, yeah, I can see the consistency in it, so I'd be reasonably happy with that, and you'd expect October, November to be better.
Yep.
Okay.
I would agree.
Great.
October, November.
So you'd probably look for something in that space for a good dividend.
Yeah, and the staples, like we mentioned before, they're fairly consistent. They're safe stocks, and if there was ever anything to happen, like a recession and so on, I'd be betting on these.
Right. Okay, then we've got utilities.
Utilities, look at that. So just
that's classic, isn't it?
flat, and it doesn't have very big moves. So this is another one that I actually do like.
Yeah, okay.
Because it's, again,
But from a growth point of view, though?
From a growth, probably not. Dividend and stability.
Right.
That's what I'd be betting on. If we were to go into, say, a recession or the economy slowing down, people still need their lights on.
True.
We still need our utilities. We still need to watch funny cat videos on YouTube. So
I don't know
we're
about
going
that. That's telling a lot.
That is, yes.
You preferred... No, we won't go there.
Or watch the stock market show on YouTube.
Excellent.
Now, last year in November, it did outperform expectations. Okay. So in our October, it's currently to expectations as well. The month of October is up. So are we going to see a bit of a move up in November? I'd be watching these. Yeah,
great. All right, so we're trying to align volatility and the reliability of the movements in the share price. We know that there's some stocks have got dividends coming up. We can pick a couple of these sectors that you and I both like. You've already indicated that you want real estate, and so have I.
Yes.
I'd probably go for financials or consumer discretionary as my additional ones from the point of view of that I'm thinking about, okay, if they're reliable enough, then they're more likely to be, knowing that the dividends are good with those stocks. That'd be my preferred pick. But growth, I would just flip that on its head and choose different ones altogether. What about yourself?
Dale will probably kick me for this, but I agree with you. Yes.
But you said you liked utilities though, so that's one point of difference.
That is one point of difference. I do like utilities. Utilities is like we can see on the chart now.
Okay.
It's fairly consistent.
Fantastic. Okay, well that's all we have on the sectors for now. Pedro, so you're going to stick to your sectors?
I think I will.
Are you sure?
Well, I'm supposed to say I'm happy with them,
Yeah.
but I might change my mind later.
Okay, I thought so. How about we get back into Optima? We're going to take a look at the stocks that we prefer, and we've got loads of stocks to look at, and ideally you want a watch list of 15 to 20 stocks, with the priority being high dividends and volatility below 6%. We'll show them what we mean.
That's right. But before we get into this, just remember there is not one way to do this.
We'll show you one way to identify potentially low-risk stocks that pay high dividends, and then we'll look at the stocks. So let's go to the charts.
Okay, on your screen right now, we have a watch list of the top 100 stocks in the ASX market. So it's in order of alphabetical order at the moment. And we have the market caps and the dividend yields.
The franked dividend.
The franked, very important, franked dividend yields.
Yeah, and some of those are fully franked and some partially franked, some unfranked. So we won't actually see that here, but people can do their own research to have a look at what the franking actually is on each one. But this is about, you know, the grossed up dividends, so including that franking.
Right, and now part of our research in stable stocks, we wanted to look at the ATR, the average true range. And by doing that, we actually looked at the average true range over a period of 52 bars, which in this case it's 1 year because we're looking at the weekly chart, as you can see on the right-hand side here. Now, we have the ATR scores in this column here, and we've also got it on the chart there. Now, what does ATR actually mean?
So we're looking at the ranges. So we're looking at highs and lows of the bars and comparing it to previous bars price action. So over a long period of time, if we're looking more medium term, it makes more sense to look, you know, over a bigger time frame. But what I thought was interesting, so the thing that I love about this this chart we've got here is that we've got the franking there, and we can clearly see which ones are the high franked dividends above 10%.
Right.
And we can also see that the volatility as well and compare the ones. And you and I did a bit of a look through, and over time we could see that if we looked below around 6% or close to 6% and less, that we were picking the stocks that were of acceptable volatility, and also then matching that off against the sort of dividends that we want on the watch list.
Exactly, and on the other end, we saw some pretty volatile ones that were above the 6%.
Yeah,
and that's what eluded us. So,
yeah. So for example, if we go down the list, we can see. I'll just take one here. We've got Ampol, ALD, that's 14.28 franked. And we can see that down here, you can see that's 4.57. It's showing that, or 4.97, showing that that's the current volatility on the chart there. So we can come back to this as we go through and look at some of the stocks.
That's right, we're going to have a look at some stocks there soon.
Yep, now that's really interesting. So stay tuned as we come back to that. So we've identified stocks with grossed up yields of around 10% or above, and that is franking plus divs totaling close to 10% per annum or higher. And we've got a measure to compare the stocks so we avoid selecting the most volatile ones, and this means the potential to make good returns when the timing is right.
Correct, but just to be clear, there is not one way to do this again, and some investors may decide to accept a lower dividend income for the potential of a higher capital gain, or to lower their risk.
Now, Pedro, this next part is my favourite. Are you ready to get into it?
Just say the magic words.
Okay, let's take a look at the charts. All right. So on the screen there, we've got Bank of Queensland, and that's one of our first stocks that we looked at. So this is the one that's going to pay a dividend in a couple of days. Now, just to give everybody an idea of the stock's movements on the chart, we can see there over time it's been in this long-term decline into the COVID low, and since it's tried to recover, but it's fallen away now. You and I both think this looks primed and potentially ready to go, or not yet, but getting very close to ready to go.
It is.
If we look back here and we go down the list and we look at our Bank of Queensland, we can see here that we've got an ATR of 5.6, so it's within our range, and we've got a nice 11.33 grossed up dividend there.
I'd be happy with that.
So that's nice, isn't it? So that's probably one of our picks there, and we're just going to have a quick look at the weekly chart to bring that up there and see what's happening. So short term, Bank of Queensland is testing the support from that low there. And, you know, all we need to see is a bit of a movement up to tell us whether it's more likely to go. But we do need really good rules on this one, don't we?
Yeah, definitely. I'd be looking at the history of the stock. But also keep in mind that when it does go ex-div, that price is going to fall.
That's right.
By the amount, usually by the amount of the dividend yield. So it could actually take those lows out.
It could.
And that could actually be, you know, the precedence for continued down, but that could be the final blowout as well.
True. And if it holds, it might actually indicate that there's strength, depending on how far it falls when it goes ex-div.
Yeah.
It might actually mean that it's stronger than perhaps some people might be thinking.
Definitely. I've actually seen stocks that actually trend up after ex-div, which is,
It's quite interesting to see that, isn't it?
Yeah.
Especially if you're holding it.
Well, yeah, you'd wish that you knew that before you bought it as well, so that you know to buy it.
Yeah, okay. So let's have a look at the next stock that we've got on our list now. It's Harvey Norman. This one might surprise people, and it really surprised me as well, actually, because looking at this, I thought it was more likely to be a volatile stock. But what I find interesting is we're seeing a lot of stocks that have just traded sideways for years. You know, we thought NAB was really bad for that in terms of being the worst bank of the list. It's defied those odds more recently because it had a nice trend up. But this is a stock that trends well. So it could be a trading stock, but if it does eventually get going again, it could be a nice dividend stock to have. But this month is not looking so pretty, is it? It's not roses right now.
Yeah, it's not. It hasn't been shown much love. And Harvey Norman, people think Harvey Norman the stores, but they're actually a pretty diversified company. They do investments. They have investments on the side. So it's kind of like that Wesfarmers type stock, isn't it? So
only it's not as big or as popular at this point. Jerry Harvey is always getting a bit of flack, isn't he, for the decisions that he makes, and he's always giving it back. So I say, go Jerry Harvey, you tell the industry what you think, keep telling it. And we're looking at how it's folding in the short term, and we should go back and have a look at what's happening with the ATR for Harvey Norman. We can see it's around that 6%, which is acceptable, but slightly higher, so you'd expect that. But look at this dividend grossed up at the moment, which is huge.
It is.
It doesn't mean that it's going to necessarily pay that going forward, though. You know, companies can change their dividends all the time, and the share price movements will change the dividend.
Will reflect that, exactly. So what do we have?
So at the moment, it's not a buy, but we're just looking at that and watching. It could just find some support before we see it go back up. But the market's really waiting for the November period to see how retail goes.
Yes.
Next, we've got ANZ, which we know is a great stock to look at.
Yes, I like ANZ. It's holding up nicely.
These long-term sideways moves that we're seeing on a lot of stocks, from a big picture perspective, if we look at ANZ from looking at the ATR,
very low.
What do you think of that?
And you can see it's actually just been trending sideways for many months now. And it doesn't seem to have huge moves, but it's a bit of a trekker, just slowly.
Slowly makes its
way.
And what about, so we're slightly under in terms of the franked up dividend at 8.76, but you're not going to scoff at that, are you? But
definitely.
You'd still be happy with that.
That's right, especially if you're getting stability, you're getting less risk. It's a major bank, so I like
terrific. ANZ. All right, our next stock is JB Hi-Fi. Now, another retail, consumer discretionary. You can see there that it's really been trading sideways for some time now. That's a monthly chart perspective. The risk is if it trades below this low here in June, I would just steer clear of this stock altogether.
Definitely.
For now. But it's one to keep on the list and keep an eye on, given the volatility's okay. And look, the big sell-off last week's probably a bit of a telltale there. I know what you're going to say, but do you want to say something about the weekly chart and where you think it would be a concern?
Well, yeah. I mean, these lows is the first thing about it. But my real concern would be, how would you trade a stock like this? It's for the average investor. I can see, I mean, we can see some movements in there, and you could back test the stock, but it's really a tough one. So I probably wouldn't suggest this just for anyone.
But once it gets through this high here, could be more medium to long-term buy and hold. If we go and have a look at JB Hi-Fi on the list here, we can see there it is. Its volatility is actually quite okay, and a really nice grossed up dividend there.
Yep.
All right, so next stock is Coles. Now, this was one you liked, so I'm just going to let you talk to it.
Yeah, beautiful. Yeah, bring it on, Coles. Actually, I think that it's actually been oversold at the moment. And if we go over to the weekly chart, I'm just going to expand that there. It's currently trading at these historical levels here.
So what you're saying is you think it's pretty close to confirming a bottom, do you?
It is. That $15 mark is looking like a strong level. I think if it does go below that, I'm not going to be very excited.
Okay.
But it's if we go back to the dividend
it should turn
yield,
somewhere around where it's trading at the moment, is what you're saying?
Yes, that's right. And with a 9% fully franked dividend and apparently 3.9% ATR, even though it doesn't necessarily reflect that on the chart,
but that's
which
more
is
because
interesting.
of the short-term volatility, which we're more looking at, what does it do over a yearly time frame?
Yeah, that's right. Yeah, it's we're looking at the longer term, and it has been trading sideways for a while now. But I'm thinking this band, it's starting to slow down. I'm pretty excited about that. Okay, so next we have WBC. This is one actually that we covered last week, which is doing that nice little triangle pattern that we mentioned last week.
Excellent.
Again, my thoughts haven't changed on this. I like it. It's moving close to the apex of that triangle, and it could actually either go up or go down.
But last week's bars, not impressing me. So we really need to see a flip strongly in the other direction. If we get a move below these lows here, that would be the short-term concern. But like you say, all it has to do is push up through this line here, and then off it goes again.
And then off it goes. And
So,
this is actually one of the best dividend-paying financials, isn't it? We'll just take a quick look at the dividend yield there.
There is 13.35 franked up, and it's 4% in terms of that ATR over the medium term.
I'd be happy with that.
Okay, great. All right, let's have a look at another one. Now, FMG is an interesting stock. You'd think that this would be hugely volatile, but it's not, is it? I mean, it has these lovely trends. Volatility during this period here with COVID, you'd expect it, but after that, it's sort of, just sideways moving. If we go back and have a look at what FMG is doing, we can find that on our list. We've got FMG here, 6.5. It's slightly higher though in terms of the volatility, probably because of the more recent activity, but around 20% franked up dividend.
Yeah, not surprised, But FMG has been typically a good dividend payer, haven't they? Yeah, but you have to weather all of the volatility, and there is a gap there on the weekly chart, which
so if it takes out this low, then that'd be the big concern for FMG, wouldn't it?
Yes, it would, definitely.
All right, so one to watch definitely
One to watch, not for the faint-hearted.
Now, Stockland, a lot of these property stocks have had recent falls, haven't they?
Yes.
I like a few of the property stocks. GMG is a good one, but Stockland has actually pulled back nicely. It's heading towards this support line again, which is a previous line. We've also got a level somewhere in there. So it may find support, turn around and try to go back up, but I'd be suggesting it's more likely to head closer to this level down at $3.40. But once that happens and it starts to move back up again, it could be a really good one. And look, these stocks pay dividends more often. They're property type stocks, which can be good for people wanting to have income more than just twice a year. So if we look at Stockland, we can see 15.71. And we've got 5.56%, so it's under that 6%, and it's a nice high franked up dividend there.
Pretty good, yeah. I like Stockland. One to watch. For sure.
Definitely one to watch. Well, look, that's it for our topic tonight. We've still got lots more to get through, but before we get into some more stocks, for those watching on YouTube, you can watch all of tonight's show plus the bonus content in the second half where we get into lots more stocks by simply taking a couple of minutes to secure your free 7-day subscription to talkingwealth.com. You also get to watch Dale's weekly Australian stock market report where he shares his view on the market, where opportunities may arise, along with lots of stocks to put on your watch list. It's now time to pick up your phone and give us a call on 03 9290 9988. That's 03 9290 9988. Or you can text the number on the screen. Whilst we wait for your call, let's get into our next email. Now, it's time we get into our next question, which is from Isaac. Isaac says, "Hi guys, what advice would you give to younger people on how to start investing? Any tips or tricks would be greatly appreciated. Big fan of the show. Keep up the good work. Kind regards, Isaac." Don't you just love the encouragement he gave us? That's cute.
Love it. Cheers, Isaac.
But it's great for young people. I mean, what would be one or two things that you would suggest that young people think about in relation to investing?
Education. Education is the number one.
Yep.
I mean, if you wanted to be good at something, if you wanted to learn a trade, for instance, you would educate yourself. That would be my first thing. Second of all, don't solidify your mind. Always have it open and open to new ideas and so on. You know.
Yeah, so because you find some young people, they're very fixed on what their parents think because their parents may have had certain experiences in investing in property or shares, and so they tend to be fixed on what they're thinking, don't they?
Yeah, definitely. So education, books, copy of Dale's book.
Look, I'm a big one for saving. So for me, it's about if you've got some income or maybe you've got a part-time job, maybe your parents give you some pocket money, make sure you save at least half of that. And when you've got enough to buy a share, then go and buy something like a big one, BHP, Commonwealth Bank, you know, one of the big stocks that over time they may have some volatility but will weather the storm and provide some dividends, and like you suggested, an education follows that. So I've known some people who have bought some big shares, watched them grow, and then they've used that to pay for their education.
That's right. Yeah, well, it was a good question, Isaac, and hope to hear from you again. Now we have a text from Jacob regarding QBE. Hi guys, love the show. I'm interested in QBE. I have not bought the stock yet. There is a swing entry occurring on the 20th of October 2023. I think it could do well over a couple of years in the current high interest rate environment. Would love to know your thoughts. Regards, Jacob. All right, so it looks like you've done a bit of research on this, Jacob.
All right, well Jacob's got it under control, hasn't he, by the sound of it?
That's right, swing trader.
Okay, so I mean, it's a really good strategy, isn't it? I mean, I remember when we first started looking at swing trading, there are different strategies. Swing trading covers like a particular one sort of, I guess, risk profile in terms of buying and selling stocks. And there are different rules that sort of add layers on top of that to make it lower risk. But looking at this, I think he's got it because, I mean, it's just gone through to a new all-time high, but then we've seen a fall. Now, whether that's because of market-driven activity, this fall that's followed, I'll just expand the chart up so we can all see that, whether that fall this week is due to the stock going ex-dividend or some other reason, you really need to look at what's happening there. So sometimes it actually pays to wait until the stock closes for the week above, because they say that the amateurs open the market and the experts close it. And you know, what did the experts know at the time when they closed the stock there? Yeah,
that's right. You can see that bar actually, it traded up first and then just closed heavily down.
Right back down near the open.
And people are waiting. They're waiting on those key levels. They know. I mean, that's the basics of
well, look, a lot of the
trading,
algos now, you know, are just waiting to pick people off, aren't they?
Exactly.
And so sometimes you can get tricked into trades just because it goes a few cents above and then all of a sudden it turns and burns.
Right, but I would also add that if you have tested this, Jacob, on the on the swings, then stick to your rules. If it triggers an entry, then it triggers an entry.
Excellent advice there from Pedro. So thank you very much for that. Now we've got a caller and it's Matt. Hello, Matt. Welcome to the show. How are you this evening?
Good, thanks. How are you guys?
Great, thanks, Matt. Look, it looks like you've got a stock for us tonight. What have you got there?
AKE, it's a lithium mine.
AKE.
Yes, I don't own it. I'm actually watching it. I'm actually doing Module 4 at the moment, so I'm just learning price retracements and stuff. But
don't you love that?
Mm-hmm.
Yes, I've only just set up the tool, so I don't actually know how to use it yet. But I'm just trying to apply it to this stock. I can see there's a bit of support around like $9.90.
Okay.
And I just wanted to get your guys' thoughts, and it's kind of hit like a fib ratio level of about 38. It's come off its high. So I was just wondering if you think it'll go down to 50, or it could start to turn soon.
Mm-hmm.
I'm just waiting, basically, because I think it's got good support around, as I said, around $9.90, and then there's a bit more around like $9.18. That's around the 50% mark there.
Now, when's your exam for Module 4?
Oh, I've only literally just in the first week of it.
Okay, but
Yeah.
so obviously you've got one more module to go. I can't wait until you get to Module 5, because there's a lot of answers in that module that will help you, in advancing from price to looking at pattern. But from a price point of view, are you looking to buy this if it trades off that, and have you got some really good rules on it?
Yes, I am looking to buy it. Because I just think it'll rise up nicely again. Because it just looks like just looking at a pattern without knowing anything about patterns, it just looks like it's coming down to a level where it'll just look like it should bounce off. But yeah, as I said, I'm just kind of waiting, and I'd just like to know your thoughts on this stock as well.
And are you looking for short term, or is it more medium?
I would say medium term.
Okay.
This one. Short to medium. Let's
Short
put it
to
that way.
medium.
Short to medium.
Okay,
Most
now.
of its runs go for about 3 to 4 months.
Thank
So
you very
that's
much
kind
for
of
the
short
call.
to medium.
Oh, we love to hear from you on the show, and thanks again. I know you've called in a few times. Thanks. We'll get into the chart for you.
Yep.
Thanks, mate.
No worries. Thank you. Thanks, guys.
All right. So, would you like to have a go?
Yeah, definitely. So I just put that level that Matt was talking about earlier, and let me just say it's great that he's applying what he's learning to actual charts and just seeing how they unfold in real time. Because it's one thing to take what we teach in the modules, but then actually applying it in real life and seeing it unfold, that's the next level.
Yeah, it's amazing, isn't it?
Definitely. Now,
Okay, so he's identified a strong support there, and he's thinking that it might turn around and start moving back up again. I mean, there's a lot of evidence to suggest that, because it's had a lot of price action from 2021.
Yep.
So what else would you be looking for?
Yeah, I'd be looking if it tests those key levels. I'd also be looking at what he's learnt in the earlier modules, so Module 3. And looking for a certain signal to actually trigger that entry. But it's good to, and that's the beauty about price analysis, that he's just currently out, he's just looking at it at the moment, but he's
Can we get a trend line
he's not
down
actually jumping in and on FOMO, like a lot of people would think that this is cheap at the moment. But there you go, that trend line is beautiful there.
So a trend line helps reduce the risk, and there's a strong level that he's identified underneath. A few really nice points there. Obviously, there's a lot of hurdles to get over yet, so it's just one of those things. If it keeps falling further, then that basically answers his question. He doesn't have to do anything.
Exactly, yes. Okay, so now it's time to get into our next caller. We have a new caller called Adrian. Adrian, how are you?
I'm good, thanks, Pedro. How are you?
I'm good. Nice to have you on the show.
Thanks for having me.
Now, you've got a question about CSL, I believe.
I have. I purchased the stock before I was a student of Wealth Within and doing the courses, and obviously shouldn't still be in the stock, but I've been holding it because I didn't have good exit rules. But in Module 4 at the moment, I'm looking at price analysis, and I've got what I think is a really significant level of support and resistance that it closed right on last week.
Right.
And obviously the first 2 bars this week have been upwards, but if it gets below this last week's close, it'll trigger my sell rules and I'll be out. I just wondered if you thought I've picked a good level there of resistance and support.
Right, okay, so that level of support was at?
I don't have my computer open because the live stream's on.
Around 240. You said around the close?
Around the close, around the
close
current
last
close.
week.
Close of last week. All
Okay.
right, so we're looking at the the 250 mark.
Is that? Do you want to have a look on the week?
Right. Well, thanks for the question, Adrian. It's great that you're applying the price analysis again. Do you have an exit rule? Have you established an exit rule yet? A trailing stop loss?
It would be at about 10% loss at the moment. So I should have had a trailing stop loss on it when it was trading up around $300 and a little bit better. But I didn't have a rule at that stage, and I kept thinking, it looks good long term. But it's sort of trending downwards now. So I've drawn a line in the sand. I thought I can't keep holding it if it's falling.
Perfect. That's a good strategy to have.
What's
draw the line on the sand.
Isn't it, Pedro, is how...
Thanks for the call, Adrian.
Let's get into this for Adrian.
Thanks,
Adrian, look, I mean, what he's identifying here is that there's strength in this level here. So I just see what he's saying. He's talking about last week's close, which is around 233. So I'd say that the stronger level is probably just above that, given all of these moves. You know, it's just probably slightly above that, but you don't want to split hairs, I guess, over it.
Yeah.
But if it doesn't turn around in the next month, I'd be really concerned about where it's going to end up. That's all I can say, looking at the share price right now.
Yeah, I'd be saying to Adrian, look at the short-term bar analysis as well, and again, drawing that line in the sand like he has. Look for those exit rules, those exit signals that he's learnt in the module. And if it does trade below that level that you mentioned there, I agree. I'd be looking to close it off.
Yeah, because it could end up somewhere around here, 200, 210. Might come back around those sort of levels if it doesn't find support where it is now.
Yep.
You know, we thought it might find support here and then start trading up a bit, but it's actually continued below these lows here. And so that's a big thing.
Yeah,
so look,
it's really struggling.
Adrian, great stock though to have it on. You could have been in something a lot worse, so I wouldn't worry too much about that. Like, we see a lot of people start with penny dreadfuls and you haven't done that. So congratulations on that front, and then you're applying your analysis to manage the risk, because that's all you can do. Now, that's all we have on CSL now. We hope you've enjoyed our show on YouTube. Remember to show your support for us by commenting below this video after the show, because we'd love to hear your favourite part of the show. Also, give us a big thumbs up. It really helps new people discover these videos, and we'd really appreciate it if you can show your support and subscribe to our channel. And that way you know when we go live. For those watching via Talking Wealth, stay tuned for the bonus content we promised.
In next week's show, we take a look at the best bank stocks and compare them to the insurers to see which ones might get you the best returns. We'll also answer your questions and so much more, so make sure you put next Tuesday night's show on your calendar. Also, give us a big thumbs up and subscribe to the channel. As always, thank you for joining us. For now, goodbye, good luck and good trading.